What if I told you that this is the headquarters of a company that has zero employees? Apparently, it trades in silver bars, and this company loaned one of the private entities owned by the Adani Group a total sum of $202 million. And what if I told you that this is the office space of the statutory auditor of two of the largest companies in the country, Adani Total Gas and Adani Enterprises? And you'd think that somebody who audits these large companies would also be the auditor of other large, well established companies, but this is not the case. According to Prime Database, the only other company that this auditor audits is a company called Globe Textiles, which is a penny stock. And what if I told you that this man on the far left might be single handedly responsible, allegedly, for siphoning out hundreds of millions of dollars from the public shareholders of some of the Adani Group companies and also millions of dollars from the Indian taxpayer? These are just some of the many allegations that have been made by Hindenburg Research in their report, which has been titled, as we all know, How the World's Third Richest Man is Pulling Off the Largest Con in Corporate History. Right? And in this video, the whole idea is to actually go into the report, because I feel that since this report has been released, there has been a lot of talk about, depending on which side of the argument on, that there's propaganda and all of that, but nobody has actually addressed, deeply and, with insight and with data, what has been written in the report. And as we get into this video, I just want to make one thing very clear, that I'm coming at this from the perspective of an investor, and an investor doesn't necessarily think in terms of right or wrong, black or white, propaganda or not propaganda, right? We usually like to think in terms of probabilities, right? If the facts or the evidence or the allegations that have been presented make us lean in a certain directions, we're going to make up our own mind about whether we want to be invested in such companies or not, right? And it has nothing to do with what the court of law says. It has everything to do with making our own decisions, right? With that, I also want to make a general disclaimer that my views and this video has been based on the research done by Hindenburg. And secondly, the whole idea is to learn from this episode and become better investors. It's not to necessarily disparage any particular business group. So in this video, we're going to go in depth into the three key allegations that have been made in the report. Number one, stock manipulation, aka pump and dump. Number two, money laundering. Number three, siphoning of hundreds of millions of dollars of public shareholder money into the group's private entities that have been, incorporated offshore. And number four, we'll also look into the three key lessons for investors that we can learn from this whole episode. In order for these activities to actually take place, we must understand the system that is facilitating the movement of money from the listed companies to the private companies to the offshore entities, and similarly from the offshore entities back into the Indian companies. Basically, the allegation that there is money laundering and there is siphoning of funds. And the way this whole system works, if we were to visualize it, it would look something like this, right? These are the broad elements that enable these processes to actually happen. So first of all, there are offshore entities, right? Allegedly, let's say if you want to launder money or get money into the Indian entities and the source of this money is unknown. So offshore entities will send money to a questionable Indian entity, which are not owned by the group but are somehow controlled by the group, and we'll see examples of how that works. And then that money moves into a private company controlled by the group, and from there it moves into the public company. And this is the path that the money takes when it comes from abroad. Similarly, if the money were to leave, right, and the allegation here is that there is siphoning of public shareholders' money. The way it works is similarly, it'll move from publicly listed to private company, private to a questionable entity, and from there to these offshore entities. Similarly, when it comes to, say, the pump and dump, the way it happens is that in this case, the money is not necessarily coming into a private company owned by the group, but this money is being invested by some funds that are based in Mauritius, places like Mauritius, that are posing as independent funds, but are investing loads of their money into the stock market in only one stock, which is the Adani stocks, depending on whatever different Adani stocks. And they have a very peculiar ownership pattern, तो उसका भी examples हम देखेंगे. So this is the third way money can move in, where the stock market is the key element. And all of this movement in and out is being facilitated by the weak financial controls that are there within the company, and that are making this possible. If you were to visualize it, we can look at it something like this. So these offshore entities are being run from London, Cyprus, and Mauritius. These are entities that are known. These are places. These are countries that are known for having secret banking laws, and it's very hard to establish the ultimate source of the money. That's exactly why a lot of companies, including as the allegation has been made, that the group is using these locations to move money in and out, right? And then obviously in India we have the group's company and the stock market, as we talked about. The first key allegation is that of stock manipulation or pump and dump. And in order to understand this, we need to understand the most fundamental rule for being a publicly listed company, which is that SEBI rules say that minimum 25% of the shareholding should be with public shareholders, right? Which means that maximum 75% can be with the promoters. And in the case of Adani company, something very unusual is happening, right? First of all, 5 out of the 7 listed companies of the Adani Group are actually on their maximum threshold or very close to their maximum threshold. For example, Adani Power is at 74.97%, Adani Total Gas is at 74.80%, and Adani Wilmar is at 87%. Now, in the case of Adani Wilmar, this is an exception because it's a recently listed company. It gets some time before it can reduce the maximum shareholding to 75%. But the point is that most of these companies are very close to their 75% threshold. Now, why is that a problem? Well, the problem is not that they're at that threshold. The problem is that the remaining 25% that should be with public shareholders, there is a problem over there. And the problem is that 25%, a significant part of that 25% that should be with public shareholders, is owned by entities that are domiciled out of Mauritius, right? And these are investment funds that are based out of Mauritius. Now you might say, well, what's the problem? So what if they're based out of Mauritius? The problem is not that they're only based out of Mauritius. The problem is that a significant part of these funds, right, the total assets under management that they have, a significant percent, sometimes 95, 98, 99% of the total money that these funds have are invested in only one type of stock, Adani stock, right? Which is ridiculously, right, very, very unusual. And for example, if you look at this, Cresta Fund based in Mauritius has $674 million, 89% is in Adani stock only. Elara India Opportunities Fund based out of Mauritius, $3 billion, 98.8%, right? So think of it like this. You invested your money in a mutual fund, and the next thing the fund manager does is that he goes and buys only one stock, which is, Adani stock. This is ridiculously unusual. Now, if this is true, that a significant part of the public shareholding is being controlled indirectly by Adani Group through these entities, these investment funds, right? It means that they might potentially, allegedly, might be violating SEBI norms. Now you might think, well, why is that a big deal? And how does that equate to stock manipulation? Well, first of all, it's a very big deal, right? Secondly, the way it equates to stock manipulation is because if a large chunk, more than 75% even, which is permissible, is owned by or controlled by Adani Group, it means that they have cornered the stock. And cornering the stock is a very simple concept, right? It means that a large chunk of the supply of the stock is with one entity or with one company or with one owner, which means that the probability of manipulating the stock becomes very easy. So think of it like this. It's the same as the OPEC the OPEC countries. They can control the prices of oil to a large extent by controlling the supply of oil, right? So it's like that. And on top of that, if you also add to this another fact, which is that in 2018, 19, and 20, right, a significant percentage of the delivery volume, the stocks that were being bought and sold, were coming from these suspected entities. It even creates a bigger case that there might have been a case of cornering of the stock. And add to that another very, very interesting story, or another thing that played out during the same period, is that Adani, a group of companies, which is the market value is around $120 billion, right, as of the latest, maybe before the report came out, right? And interestingly, 100 billion of this wealth of market value actually came over the last 3 years, which coincides directly with these shareholding patterns and 40% delivery volumes from these unknown entities based out of Mauritius, right? So if you look at it, Adani Enterprises has gone up over the last 3 years 14 times. Adani Transmission has gone up 7 times. Adani Total Gas at 20 times, 9 times, 3 times, 1.5 times. So there's a ridiculous increase in wealth, and it all coincides with all of these different factors that point to the potential reality that maybe Adani Group is indirectly controlling these funds and therefore controlling the stock price, right? And Hindenburg Research actually interviewed an employee that works with Elara Capital, and we'll get to what Elara Capital is in a few minutes. And what the employee said is that that's precisely the advantage of these kinds of vehicles, so that you have the illusion of float, right? But there is no float. Now, what does float mean? So if 75% maximum is permissible to be held by the promoter, the remaining 25% is called free float, right? It is the shareholding that's owned by non-promoter entities. And what happens is, when you indirectly own another significant chunk of the total stock, as we have just discussed, by the same entity, by the promoter, it means that the real effective float or free float is very, very small. So that's what he's saying. So that you have an illusion of float, but there is no float in reality. There is no float, and the price can be really anything, right? I mean, you can take the price up to whatever you want. And after a while, you don't even have to do it. There are guys in the market who will do that for you. Even after all that, you might say, well, the thing is that despite the fact that there are these funds based out of Mauritius who hold 90 and 99% of their assets under management in only one stock, still, the whole argument that there is stock manipulation, that there is cornering of the stock, it's based on the fundamental assumption that Adani Group controls indirectly or influences indirectly these very funds. And in order to understand that, or figure out whether that is the case or not, we need to understand who is the ultimate beneficiary of these funds themselves. And in fact, there was a parliamentary inquiry in this matter as well in July 2021, and SEBI also started an investigation in July 2021 to answer this very question. However, there have been no conclusions on these investigations yet. Now, the ultimate beneficiaries of these funds, by the way, and the funds we have discussed, are the larger funds that show up, right? Because if you hold over 1% of any company as a fund, as an investment fund, you need to declare it publicly, right? So these are the funds we're discussing. So there are many more that are less than 1% that are not even the subject of our discussion. But there are 4 entities that control these funds themselves. The first entity is Monte Rosa Holdings. And Monte Rosa is a very interesting entity because, well, first of all, it owns all these different funds, or is the owner or somebody who controls these funds, right? APMS Investment, Cresta, LTS, Albola, Lotus Global. And they, again, similarly, 99%, 89%, 97% in Adani stock. First of all, there are 2 key linkages between Monte Rosa and the Adani Group. First of all, the chairman and CEO of Monte Rosa is a director in at least 3 companies that with another gentleman called Jatin Mehta. And Jatin Mehta was convicted for fraud of close to $1 billion. He was a diamond trader, and he is a fugitive, doesn't live in India anymore. You can do more research on your own about the gentleman. Now, interestingly, this gentleman's daughter and Mr. Vinod's son, Mr. Vinod Adani's son, they are actually married. And this is the picture, by the way, of the 2 people that we're actually talking about. So that's the first linkage between the Adani Group and Monte Rosa, right? The second is that in 2002, Adani Group actually declared an entity called Godami International as a related party because Chang Chung Ling, the gentleman we talked about right at the beginning of the video, he was one of the directors in that company, right? And interestingly, in 2007, Godami actually invested around $17 million into Lotus Global Investment Funds, the same fund that used to own significant part of only one stock, right, which is Adani stock. And during the same period when this investment of 17 million was made, Lotus Global actually came to own around 4.15% in one of the Adani companies, right? So that is the second relation or key linkage between the promoter and these funds. The next entity, Elara Capital, controls two funds, the Vespara Fund and the India Opportunities Fund. Now, both these funds combined manage about $3 billion, and all of this money, or at least 99% of this money, is only in Adani stocks. Another thing to note is that the CEO of Elara Capital, Mr. Raj Bhatt, has extensive ties with Ketan Parekh, who was the mastermind behind one of the largest, or probably the largest stock market scam in India that took place in the year 2000 2001. Now, there are two pieces of, let's say, evidence or linkages that have been presented in the Hindenburg research report. The first one is there is an email that was leaked that shows that Raj Bhatt from Elara Capital, along with Dharmesh Doshi, had sent an email to this gentleman. Now, who is Dharmesh Doshi? Dharmesh Doshi is one of the sub brokers who aided in the stock market scam along with Ketan Parekh, right? And so there is a linkage between Mr. Raj Bhatt and Ketan Parekh from that source. And another linkage, which is a little bit more direct linkage, shows that Mr. Ketan Parekh's daughter was actually did an internship as a researcher at Elara Capital in the year 2013 and 2014. Now, if you want to find out more about this aspect of the report, you can actually go to the report and search part 2, and it will take you to the section where the Adani Group has a track record of engaging in alleged stock rigging with India's most notorious market fraudsters. And there you can find a lot more details. Now, the third entity is New Liena Investments. This is a fund that's based out of Cyprus. It manages around $420 billion, shows the same inconsistent shareholding pattern, which means that it manages around $420 million, and all of it is invested only in Adani Green. Now, New Liena has 3 shareholders, and most likely all 3 of them are employees of Amy Corp. Now, why Amy Corp and what does that mean? We'll come to that just in a second. But these 3 shareholders, according to the report, when they were contacted, the first one, the call went straight to Amy Corp's office, right? The gentleman's name is Michael Tofaris, I believe. The second one, again, the gentleman's name is Michaelis. When he was called, he said that I'm not an active director with New Alien Investments, and you should contact Amy Corp for more details. And the third key shareholder, Endeta Group, when they were called, the call landed straight to Amy Corp's office, right? And also, I forgot to mention the fact that this gentleman, the first shareholder, is actually a director at Amy Corp, right? So there's a very close linkage between, it's very clear that Amy Corp controls this fund. The reason why this is important is, or the question that arises is, does Amy Corp have any linkages with Adani Group? And yes, it does have extensive relationships with the group, because Amy Corp is the main incorporator. It is the company that Adani Group's Mauritius-based entities have used to incorporate their companies in Mauritius. And at least there are 17 known entities that have either Mr. Vinod Adani or Mr. Subir Mitra, who is the CEO of Adani Family Office. Either one of them are the key directors and shareholders in these entities. Also, 7 promoter entities are also linked to Amy Corp. Another interesting thing about Amy Corp is that it's not just an incorporator, and I'm quoting the report. It is also a worldwide facilitator of the movement of funds within its own bank and investment vehicles, right? Which can serve as a wall between markets and ultimate beneficial owners. So So Emi Corp is a very interesting entity. It also has been featured in the $4.5 billion 1MDB fraud, and the details of which are actually in the book Billion Dollar Whale. And by the way, this Billion Dollar Whale, the book is going to become a movie. So when it does, it might be an interesting, watch. And also another thing is that Emi Corp has developed an expertise to wash a client's money, disguise money flows, and discreetly move money around. This is, by the way, a quote from this book, Billion Dollar Whale. The final entity, Opal Investments, owns 100% in Adani Power. It owns 4.69% of Adani Power, or around 20% of the free float, right? Now, the interesting part about Opal Investments is that it was incorporated on the same day by the same company that also incorporated another company owned by, well, not owned, but like the main director was Mr. Vinod Adani. Now, you might say, okay, this can be a coincidence. What's not a coincidence is that company, TrustLink International, that incorporate both these entities on the same day, right? He, on his LinkedIn, mentions that he sits on various big international companies such as Adani Group. Another way to kind of establish a little bit of linkage, which might kind of hint towards the fact that the group might be indirectly controlling all these funds. Now, all of this, everything we've kind of understood until now, all of this leads to a result, which is that between 2020, early 2020 and 2023, the stock price of Adani Enterprises has increased by 17 times, which is a ridiculous increase in any stock price, for that matter. And it currently trades at 254 times, P. This is after the fall. So before the actual report came out, it was trading at 317 times. And what's more, maybe a little bit more disturbing, is the fact that at these valuations, Adani Enterprises is actually opening an FPO and raising money from investors at these valuations, which seems, to be overvalued by any reasonable financial standard, right? And to get a perspective of what this 200 300 p means, it means that every 1 year, for every 1 rupee of earnings, the company is trading at around, say, 300 times. This means, it'll take 300 years to earn your money back if you invest in this company at these valuations. And maybe if you look at it like that, you tend to realize that, this is a ridiculous valuation. Another important aspect is if you actually look at the fundamentals also of the company, because you might think, well, what if the fundamentals really, really improved? You see that over the last 5 years, from March 2018 to even the last, let's say March 2022, there has been absolutely no increase in profits. And if you look at it from March 2020, it has increased from 1138 to say 1123 if we take into consideration the last 4 quarters, right? So there's not a lot of increase in profit. If you look at cash flow, now cash flow 44,000 over the last 10 years total, and capex was only 13,600 crores, which I'll explain in a second, which means that free cash flow was 58,000 crores. And even if you look in terms of FCF divided by CFO, 131%. Now this is extraordinary. But if you look at it on a year-on-year basis, in every year, the capex, the money spent on either growth capital or maintaining of the assets, was actually more than the CFO in every single year, except, the main reason why the capex is only 13,666, which is actually a negative number, which means the company got money, was because in the year 2016, there seems to be some sort of transaction where the company has sold off a stake or listed a company or something of that nature. If it was not for that transaction, actually there would have been almost close to no free cash flow with the company. And even on top of that, if you look at the North Star metric of ROE, you'll notice that over the last 10 years, the company has not, earned more than 9% ROE. And that too, that was in 2014. And it has just been going down and down. So if you add all of this, you begin to wonder, does it make sense to actually invest in the FPO at these valuations? And the answer most likely is no. The second key allegation is money laundering. And in front of you, you can see a chart that basically describes how a typical money laundering scheme works. So, first of all, there is cash that is collected through illicit means, tax evasion, whatever, right? Then that cash actually enters the financial system through a entity that is not related to the ultimate beneficiary, right? So this is a questionable entity, let's say. The second step is layering. This is a step where people who are trying to launder money try to distance the money from the source, and this is where either the money is broken down into parts, or it is directed through other entities of various kinds, and then it makes the way all the way to the final destination wherever that money is supposed to be used. Whether it's for investments, whether it's for buying different stuff, right? So this is a typical money laundering scheme, and in this case, at least in the report, there are 8 different instances where potentially, allegedly, money laundering may have happened, right? Again, that's what the report says. But we're going to discuss only 2 of those instances just to keep things simple for this video, right? The first one is in 2021, 3 companies, right? Rehvar Infrastructure, Milestone Trade Links, and Gardenia, 3 of these companies basically lent $996 million in total combined in 2021 to a private company of the Adani Group, Adani Infra. The same year, these companies, Adani Infra further lent 231 million to Adani Enterprises and 401 million to Adani Power, right? Now, the question is that who are these entities? What do they do? How do they have this source of cash, right? And in the beginning of the video, we discussed about this, this house. This is the headquarters of Rehvar Infrastructure Limited until February 2021. Subsequently, it was moved to a building, an office complex, where this is basically the picture that was taken by the site visit by Hindenburg researchers. And the name on the door, which is Mr. Desai, he turns out to be one of the employees of the Adani Group, right? And in the report, actually, they show why they believe that this is the same Mr. Jignesh Desai that's been, whose number is on the door, and the one who is an employee of Adani Group, right? So there is a linkage there. Secondly, the second company, which is Gardenia, we can clearly see that the director is Mr. Subir Mitra, who is the CEO of Adani Family Office. And clearly, because this is clearly a related party, no disclosure was made of in the related party transactions. The third entity is Milestone Trade Links, right? And these guys have given the same phone number as the auditor of the 3 large Adani companies, Adani Transmission, ATGL, and another one. So 3 of these listed Adani companies, these guys are the auditor. The interesting part is that they are not the auditor for this company, right? So Milestone has given their phone number as an auditor's number, but this auditor is not the auditor of Milestone Trade Links. Their auditor is somebody else, right? And so this is another interesting linkage between these entities that clearly have no real business, right, are based out of residential addresses, and these are the kind of companies that are lending $1 billion to these private the group companies. The second instance of the alleged money laundering actually comes from a company called Krunal Trade and Investment. And you remember we actually talked about this company where it was incorporated on the same day as the new Liena funds in Mauritius by the same incorporator. Now the interesting part is that the directors of this company are Mr. Vinod Adani and Mr. Subir Mitra, and this company actually lent in 2009 or 10 around $253 million to a private entity, Sunborn Developers, who's basically focused on the real estate side. And then around 10 years later, 2020, this entity, Sunborn, lent further $153 million to Adani Enterprises, right? And if you think about it, okay, what is the source of income for this entity? You'll find really almost funny websites these entities have, and this is just one of the entity that I'm talking about. There are actually 15, 17 of them that are mentioned in the report. And if you read it, so on their website they've mentioned, at Kunal Trade and Investment, we offer services such as sale and delivery of an intangible product, okay, between a producer between a producer and a consumer. And this is just one of the websites. There are other very funny examples of, descriptions that these websites have, and they all appear to be kind of just there to pose as website. At least that's what the allegation is, that's what it appears to be. The third key allegation that we look into is the siphoning off of hundreds of millions of dollars of public shareholders' money. Now, this example is, one of the, I believe, two or three different examples how money has actually been taken out. And this example starts off with a company called Gromor Trade and Investment. And this company in 2010 invested $128 million in Adani Maharashtra, right, in exchange for a 26% stake, right? So that's part one, which sounds great, okay? Now, what they do is 1 year later, Adani Power comes in and says, we'll actually buy this 26% stake that you bought from Adani Maharashtra. And for that 128 million that you paid to that company, we're going to pay you $551 million just 1 year later. So you're like, wow, Gromor Trade and Investments has obviously done a great job. They invested 128 million for a 26% stake in a company. 1 year later, Adani Power buys it for 551, right? So kudos to the shareholders, kudos to the people who've invested in Gromor. The issue is, or the interesting part is that Gromor, the directors of Gromor are Mr. Chang Chung Ling, the gentleman that we talked about earlier in the video, and he has featured in various, many investigations by the Indian government or different arms of the Indian government in the past, and is extensively related to the group. Also, the registered office for Gromor is TrustLink. This is an entity that we talked about, the Opal Investments Funds that we talked about. So that is this. It was incorporated or controlled by TrustLink as well, right? Controlled by. Another interesting fact is that Gromor, the investors in Gromor are Godami International, again another entity we've talked about before, and Adani Global PE, and both of these. So Mr. Chang Chung Ling and Mr. Vinod Adani shared the same address in Singapore, right, where these companies are incorporated. And this is again a field visit by Hindenburg researchers where they have taken a photo. As we discussed, all of this has been made possible by weak financial controls, the movement of money in and out. And what we mean by weak financial controls are a couple of things that have been presented in the report. First of all, CFOs have been very hard to retain in almost all of the Adani listed companies. For example, Adani Enterprises, they've had 5 CFOs in 8 years. Adani Green Energy CFOs in 5 years, Adani Ports 3 CFOs in 5 years. So this obviously for a listed company is not great at all when CFOs in all the group's companies are moving around a lot. Secondly, another form of weak financial controls or weak financial governance is the fact that this gentleman who was one of the auditors for Adani Total Gas, he started signing off on these documents when he was 23 years old, right, as an auditor, right? And Adani Group has recently released a statement kind of answering these 88 questions, and they said that, well, if we don't give young people a chance, then who will? Which is sounds very emotional, but I'm not sure whether how to kind of interpret that, right? Also, by the way, if you're still watching and if you're enjoying this video and if you feel that maybe we've done a good job, you can please consider subscribing to the channel. You can click on the button on the bottom right of your screen and simply become a subscriber. Also press the bell icon. And I also want to thank all of the 398 people who have subscribed to our channel so far. So moving on, the final one is that professional investors have also stayed awake given all of these facts. And a very interesting aspect about the the analyst community is maybe because of the way things are set up, usually whenever something wrong is happening in the company, which has been alleged in this case, the analyst will almost never issue a sell or a disfavorable report. And I think one of the reasons for that is that as an analyst, you are an analyst because you're a part of a larger organization. And if as an analyst you issue a negative report about a company, you get closed access, as in you don't get access to these companies, and it becomes a little bit difficult for you to do your research. Maybe that's one of the reasons. I'm not sure why the entire reason is, what the entire reason is, but professional investors have stayed away, and there has actually been no negative report, or there has been no sell side coverage for the stock, right? Which is a bit strange. But another interesting fact is that all of these companies, the group's companies, almost no analysts cover them. So even though they have not outrightly written in a report that you should stay away from these companies, analysts are not tracking these companies, except for Adani Ports, which has 22 analysts covering it. Almost all the companies have no coverage. And if you compare them to companies of a similar size, almost every fund house, and there are about 42 fund houses, almost all of them cover these companies that are of a comparable size. So which is saying a lot without saying anything. And also another fact is that domestic mutual funds, and presumably these are people who are very well informed, much better informed than retail investors. These are guys who are basically not holding any significant shareholding in these entities, right? So less than 1% in 4 of these large group companies. So now the real question is that how can we use this report and actually become better at analyzing companies? And I think there are 3 key lessons that we can take away from this report and from this episode. The first lesson is you need to learn to analyze a company. If you are going to be investing, you need to have a fairly decent understanding. I'm not saying you have to go hardcore and spend 8 hours a day analyzing companies, but you could actually get to know a lot by doing very little. And we've made a video on this, how 20% of the effort can give us 80% of the results. This was the last video we made. I'll link it somewhere. You can check that out. Also, there is a free Excel template that you can use to actually analyze companies, at least in the beginning part, where you can remove companies that are potentially dangerous or potentially likely that you might lose your money in those companies. And the actual I shared a screenshot of some data right over here, right? So this is a screenshot of this template, and I strongly recommend that you download it because it's free and you can use it, right? So that's skill lesson number 1. Second is you need to learn to analyze related party transactions. We are actually thinking of making a very detailed video on this topic with 10, 20 or as many as possible case studies highlighting how related party transaction can or have been used to engage in dubious transactions by promoters. So if you would like that, and if you're still listening, thank you. If you would like that, please leave a comment that you would like that to happen, that we should invest time and energy into making such a video. The third lesson we can learn is we need to be wary of companies who have a very high number of subsidiaries. One personal experience, from my experience, was in 2016 late or early 2017, I was actually analyzing Indiabulls housing, Indiabulls real estate. And I realized as I was going through their annual reports that there were 60, 70 of the subsidiaries that this group had formed. And I genuinely, I did not know what to make of it, but I just got really overwhelmed and I thought, this is too complicated, so let it be. I don't want to be involved. And at least optically, the company was available at a discount, right? But it was too complicated and I said, let it be. And some maybe months later or maybe about a year later, there was a report that actually dived deeply into how Indiabulls real estate was actually, doing a lot of illegal stuff, right? So these are the 3 lessons we can learn. Now, I just want to also leave you with what I did not cover in this video, so that maybe you, if you are keen, you can go and actually read more yourself. So the first 4 parts I have covered in some shape or form. There are actually way more examples and way more depth, but I've tried to keep it simple. Part 5 I have not covered at all, so you can try that. All you need to do is go to the report, Control F, and type in part 5. Right, so this is a shortcut, and you can do something like that. And also I did not cover part 7, right, which is how the group actually responds to critics. So these are the parts that are not covered in the video. Now, with that said, hopefully this video has been insightful. Hopefully it's been detailed but also simple. Hopefully it's been enriching, and hopefully you've learned something from these videos. Now, if you're still watching, again, please consider subscribing to our channel. It's a lot of hard work making these videos, and every time you subscribe, it really means a lot to us. And with that said, I'll see you in the next video.